Okay, folks, welcome to our trade analysis of Facebook. What we did on this trade here is what we like to do during earnings, and that is open up what you call strangle rights. What does that mean? Stick around. I'll walk you through the process in a moment. But first, let's talk about Facebook's earnings. Before we talk about the trade, we'll talk about the cash flow strategy that we employed. And Facebook closed out the session at $328.69 up on the day. It rallied on earnings. Initially, the knee-jerk reaction was the wrong one, as usual. We reversed. We are now up. How was earnings? Earnings, meh. I think that they're pretty poor, to be honest with you, and I'll tell you why. The same reason why Snapchat earnings, forward-looking, are not going to be as great as some might think. They had decent EPS. They missed on sales. But here's the big concern, and Snapchat mentioned this as well, is that they're going to have some challenges with regard to Apple iOS, their operating system, and their ability to access or have people access their ad network. So that's nothing to sneeze about. So to offset some of the bad news, they announced a plan. This is not a guarantee that they must buy back $50 billion worth of stock. It's just an announcement. Don't let them lure you into that feeling of all warm and fuzziness that they're going to be buying back stock. Simply because they announced does not mean that they have to do it. Don't get suckered in. Let's talk about the trade. All right, before we leave here, we hit a high in the after hours of 344.30 and a low of 314.43. Now, what we did is we opened up what you call a strangle. Let's walk through it. Now, some people like to buy options into earnings. We do not. We strongly advise that you do not, unless you have inside information. Do not buy options into earnings. Why? It's because they are very, very expensive. And even if you're right directionally the following day, either the long side or to the short side, well, you could still lose money, because the value of the option deflates dramatically by tomorrow morning. So what we did is that we did some analysis early on. We went into the day with a good idea of where we wanted to open up our strikes, and we decided on selling, not buying, but selling a 357.50 call option. We also simultaneously sold a 292.50 put option. Both of these options expire this coming Friday. I plan on being out of this trade tomorrow because we want to roll into other options trades on earnings, in particular AMD, Google, or what's the other one? Microsoft. One of those three, maybe two of those three. Not quite sure yet. So let's talk about the trade a little bit here. So this chart here is the chart I just showed you, just a snippet. And over here is what we were paid. So we were paid $2.73 per contract. I'm not going to go into how many contracts we opened up. I really don't like to disclose that unless you remember. So we sold X number of contracts. We were paid a $1.58 for the call side contract, and we were paid a $1.15 for the put side contract. Now, let's put that into context. Historically, going back a month, the implied volatility of those options were worth considerably less than what they were going into the earnings announcement today. Case in point, the option 1 month ago to the call side had an implied volatility of 29.67. To the put side, it had an implied volatility of 29.34. What does that mean? What does that gibberish mean? Well, implied volatility is what drives the value of the option. What drives implied volatility? Demand for the options. Why was there so much demand for the options today? Earnings. So tomorrow, now that earnings are going to be in the rearview mirror, you're going to expect to see a reversion to the mean. Meaning you're probably going to see the value of the options deflate in value and go back to where they were a week ago, probably even a month ago, because even last week they were starting to bid up the value of the options. Now they closed out today's trade at a call side value of 49.58 implied volatility versus a week ago of 34.77 and a month ago of 29.67. So you can see how expensive the options were going into earnings. So as they deflate in value, we make money. So what we really want in the after hours session is for Facebook to do not much. We want it to do nothing, the closest to nothing as possible. Now, you may be saying, wait a minute. You seem all warm and fuzzy about, how you feel going into the new trading day tomorrow. Well, what about the fact that the shares are up over $9 per share in the after hours? Why are you feeling so comfortable? Great question. The reason is because I only have to worry about managing this trade, meaning rolling up the untested side if my call side is tested, or vice versa, only if we hit 357.50 per share to the call side and 292.50 to the put side. We're way away from there. So the probability of getting there is very, very low. In fact, one of the tools that we use to identify the probabilities of whether or not our put side and our call side are going to get tested is that we use a probability calculator. Very simple. Now, you could see that the probability of hitting the call side is very, very low, as was to the put side. But this can lure you into a false sense of security, because what this does not take into consideration are what you call binary events. What is that? What's a binary event? Well, a binary event is earnings. It's a one-off day, a one-off announcement. An SEC investigation could be another binary event. An upgrade, another binary event. Your CFO leaving, another binary event. So that's what I mean by binary event. But on any normal given day, here are your probabilities of your call side and your put side getting hit. So you could see we have on any given day a 99.81% chance of the options expiring worthless. So as we move into Tuesday, we're looking pretty good from a risk-reward perspective, because we're going to be able to close out this option tomorrow at a bare minimum, unless, of course, an announcement comes out tomorrow that causes Facebook to go a lot higher or a lot lower. That could certainly happen. We're not out of the woods on this trade until we make those profits real. If, in fact, the Lord Jesus says you're going to have a profit. So we don't know that yet. It's just looking like the probabilities are in our favor. And that's what we're doing here, is we're trading the probabilities. So we got paid a credit of $2.73 per contract. We'll look to book profits tomorrow, because we do want to roll into other trades at about 50 to 60% profit on this trade. And then we'll look to roll into, again, AMD, Google, or Microsoft. Another reason why we knew we were comfortable with these strikes is because where we use technical analysis, and for those that are not familiar with technical analysis, I have a 5-part video tutorial below, my top 5 most favorite candlestick patterns. It's free. Just enter your email address. You get it for free. Use the link below if you watch this on YouTube. Or if you watch this on the website, there's a link below as well. So if you take note of the call side, well, we have resistance at or around right where our call side strike is, right around that 357 mark. And to the put side, we have a support level right around 291 per share, 292 per share, thereabouts. So don't forget, you may be saying that's really close to where your strikes are. Don't you lose money? No, not really, because don't forget, you got to add on top of these strikes, both to the put and to the call side, the premium that we were paid. So you have to add that onto the call side, and you have to deduct it from the put side. So I know it sounds complicated, but it's really not all that complicated. What's really a challenge is not getting greedy, staying small with your trade. That way you can consistently profit on these trades. So if you got any value out of this video, folks, please don't forget, enter your email address and get my 5-part video tutorial on my top 5 favorite candlestick patterns. Subscribe to the channel. And if you have a question, leave a comment. I'll get right back to you. Till tomorrow, have a great night. Be well.